Good evening, Mr. Adifemi. I hope you can hear me.
I can hear you.
Okay. So let me quickly need to bring this one down. Okay. All right. I welcome you to today's meeting. I do hope that you enjoyed your week and thank God for this wonderful weekend. This meeting is going to be recorded, so there won't be need for us to keep waiting for others that might want to still join. So what we have for today is a very simple strategy. I would say we can use it in any market anyway, but in this case, we are looking at how we can use it for the NGX. If I check my charts, what I notice now is that the market is overbought. Let's look at what the NSC, no, that's sorry. What share index is saying. Sorry, let me quickly adjust this. Okay, so let's see what the assay is doing. As you can see now, this is overbought. This is the trend line. And you see, market is trying to find support around this midpoint of what? This is my channel. This is an ascending channel. So, and the momentum is leaving. If you check the momentum here, you see, is higher than the momentum here. And what we see that price made a higher high, but momentum did not make a higher high. It's telling you that this market might retrace. So for the next couple of weeks, I expect that the market will retrace. So where do we think that is most likely going to stop when it's retracing? Number one level that is going to stop is around this level, which is where 0.618 Fibonacci retracement. Then we still have 50% Fibonacci retracement around here. There is 0.3382 retracement around here. By the time, if market should come around here, this trend is over. This trend is over. It must not come to this red line. If it comes down to this red line, the market might be down for some time. It might just want to keep, come and find support around here and still struggle. But let's see what happens in the coming week. But last week, look at what happened last week. Last week too was a pullback, a red. Momentum too was a red. So let's see if market will find support around. That's 47, let's just say like 48,000. So let us look at a stock. Then I'll now try and explain what I have for today. Look at what happened. We are looking at how we can use dollar cost averaging in a retracing market. I think that is the best strategy that we can use just to reduce the risk, to reduce the risks in the market. We need to enter your position in bit by bit. Instead of coming here and say, okay, I have 100,000 naira to trade. And at this level, I say, okay, let's say market was around 3 naira 89 kobo. And at this level, I bought. well, it's okay. If you have bought 100,000 naira at this level, when market is coming down, it comes around there, you are still there. It came around there, you are still there. You are losing as much as, let's say, what have you lost now? The market is around 50% retracement. You were thinking that it will find support. It didn't find support. Here it didn't find support. Here it didn't find support. Your entry price is here, which is 3 naira 91 kobo in this case. Your entry price is high. So for you to break even now, I need price to move from around this current price is around 2 naira 79 kobo as it is now. I need it to retrace back here, which might take a very long period. But if we apply this strategy of entering the market bit by bit, we would have, what's it called now? We would have reduced the risk, the volatility of this market. Look at it for 1, 2, 3, 4, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks, the market was going down. So what do you expect? I already knew that this is going to find support around here. In fact, I bought around here. I bought this stock around here because I already saw that it will find support around here. And look at it. Last week was a doji. And a doji, it doesn't mean that it's just like a turning point. This can be a valid support, but we need prices. We need to see price action for next week, or probably maybe like 2 or 3 weeks for me to know, to say that, okay, this support is holding. And mind you, the momentum is still red. But this is a good sign that there is money in this level. There is money, there's volume at this level. There's volume at this level. You might see price coming to retest this level at 3 naira 29 kobo before it will even bounce back, or it might even break it and go up. So what am I saying? In dollar cost averaging, a lot of people don't know how to apply it. There are different ways you can actually apply it. You can apply it by using price. You can apply it by using time. Some people will say they want to use time. They will say, okay, maybe every day or every week, they buy a portion. Let's say you bought 20,000 naira. You have 100,000 naira to trade. You bought 20,000 naira at this level. The following week, you came and bought 20,000 naira. Then next week, we only have like 4 or 5 weeks for that. But if you apply Fibonacci, it will help you a lot. You will not have bought or anything around here. Okay, let's say you even bought here and you were thinking that price will go up. Price did not go up. Where's your next level to buy? You buy around here, which is 3 naira 28 kobo. Let's say it's still falling. What's the next level to buy? You buy here, which is where 2 naira 83 kobo. Where's the next level to buy? You buy here. Where's the next level to buy? You buy here. See, almost this price. You would have bought 1, 2, 3, 4, 5 entries. And if you want to look at it this way, I'll put it on an Excel and we'll look at it together. At the end of the day, if you have bought the same quantity, 20,000 naira, 20,000 naira, 20,000 naira, let me not even use money, because money might, if you say money, you would have bought more quantity even at this price, which is also fine. It's like martingale. It's like applying martingale. When price goes down, you buy more. When it goes down again, you buy more. When it goes down again, you buy more. When it goes down again, you buy more. This is the advantage. When price is going back up, you don't need price to come back to this level for you to start making money. You don't need price to get to that level. By the time price gets to like 50% retracement of this, which is around here, which was around there, you already break even. You don't need price to come back to this level. And when do we apply this kind of strategy? You apply this type of strategy when there is uncertainty in the market and you want to reduce your risk as much as possible. That's going to apply. And another reason why you might want to apply this strategy is when you discover that market is pulling back. You have an uptrend. Looking at this is an uptrend. It's overbought. But we don't know where price is going to find support. It might find support here. It might find support here. So what you do is to keep buying at those supports. Here you buy, here you buy, here you buy, here you buy. You see, most likely it has bottomed out. But if you are waiting for it to bottom out, you might not even get it again. You might not get it and you will miss the trade. It's not really a bad thing to miss a trade. It's better to miss a trade than lose money. That is just it. But applying dollar cross averaging, you see that we've reduced the risk and we've spread the entry. The entry is now, what's it called? The volatility in the market, you've already killed it. Especially another way you can use this, and another time that you might want to use this kind of strategy is when the market becomes volatile. When the market becomes volatile, you don't know where it's going to turn. You don't know. So you apply this strategy, buying in transit, buying little by little, buying little by little as price is going down. But you don't just buy any price. You don't buy based on time, because time might not really make sense. But buy some key levels, buy support levels, buy support levels. Look at in Fibonacci. Let me now explain. This is the psychology behind Fibonacci retracement. Why do you think that this thing just works? It doesn't just work because people are entering at different support levels. That is the reason why price might not even get back to this place. Because before price gets to this level, people have already started making profit. You bought here, it's going down. You bought here, it's going down. You bought here, it's going down. You now bought here, and it's not going up. A sensible person will quickly want to cut their loss. That, okay, thank God, I was losing money before, but now I've broke even. Let me quickly come out. So because people are coming out at this level, it will now cause price to pull back again, making Fibonacci to now be like a self-fulfilling prophecy. People bought here, they don't need the price to go back to entry. So if you now buy and you are waiting for price to get to entry, it might not get there. In fact, this level now, there's a structural break here. This is a structural level, and price has broken it. What I expect is for price to go and retest this support. And why does it work? So people bought here, price came down. Immediately it gets to their entry, they quickly drop it. So they won't allow the price to go up. They are even praying that, God, please let this thing come up. Immediately it gets back to their entry, like they drop it and it falls again. And you know that this thing just works based on what I call demand and supply. When there is, you will just see that here they will supply it. People have already bought here, losing money. Immediately price come around their entry, they will supply it. And when they supply it, it causes the price to fall down, to fall back down. So let's just quickly look at this Excel sheet just to explain what I'm trying to okay. There's no way I can share these two together. Okay, let me just quickly. All right, in this case, just use this as an example and see what our entry price will be. What's it called? If we apply this strategy to this particular store, Honeywell. Let's say we have 100,000 naira to trade. Let's say I have 100,000 naira to trade. 100,000 naira to trade. And I want to buy in 20,000. 1, 2, 3, 4, 5. Okay. The first price, let's say we bought at 3 naira 87 kobo. 3 naira, I will share this Excel, please. 87 kobo. The second price we bought at this level, 3 naira 27. 3 naira 27 kobo. It came to 2 naira 87. It's even dropping to 10 naira. 2 naira 87 kobo. It came around here. This is 2 naira 41 kobo. 2 naira 41 kobo. I don't think we will get this one. Let's say we did not even get this. Let's say we did not get this. So what is, okay, how many units can we buy? Let's say this will be 2,000, which is here. I will say equals to 2,000 divided by this price. Let's see, we're able to buy these units. Okay. The total units that we bought equals to some okay, we bought this type of this unit. Then let me now see what is our average price. We enter 3 naira. Okay, let's add everything together. Adding everything together, what do we get? Divide by, how many entries do we have? 1, 2, 3, 4. Divide by 4. So it will be equals to this divided by 4. Let's say for the sake of argument. So our entry price will now be 3 naira 10 kobo. Let's say we did not get this one because it's almost, but if you had bought this, it's possible that you will get even this price, but it was not printed on the chart. For it to paint, you need a certain number of volume for it to paint on the chart, but it doesn't mean that you won't get it in the market. So what it's telling me now is that my entry price is now 3 naira 10 kobo. 3 naira 10 kobo. Where is 3 naira 10 kobo? 3 naira 10 kobo is here. Okay, 3 naira 10 kobo should be around here. You see that we are almost getting to the entry at that price. This is almost our entry. So our entry now is somewhere around here. So for you to break even, you just need price to get around this place. Let's say for the sake of this meeting, I was able to get it at around 2 naira 11 kobo. Let me put 2 naira 11 kobo. So my entry will now be divided by 5, which is 2 naira 90 kobo. So 2 naira 90 kobo is now my entry. 2 naira 90 kobo. You see, 2 naira 90 kobo was around here. So my entry had come around here. You get it? So my entry had been around here. I know this is not very accurate because I'm using price. I'm not using the actual volume. Assuming I was using actual volume, you know, I would have bought more volume as the price was going down. I would have bought more volume. So with that, you see my entry now is this, and I have what quantity? I have 3,000. Let me quickly share this Excel so that we can see what I'm saying. It's not possible for me to just share the two together. So this is what I'm just trying to explain, that I have 100,000 naira to trade and I'm entering like 20,000. So 20,000, I bought it at 3 naira 87. 20,000 bought it at, you see that I had more volume. This is the volume here. I was able to buy 5,167 units. Here, I was able to buy 6,116 units. And here, I was able to buy 6,968 units. Here, I was able to buy 8,000. You see that the volume is becoming more. The volume is becoming more. And the average price now that I entered is here, is what? 9 naira, 2 naira 90 kobo. And what is the quantity that I have now? I have this quantity. I have this quantity. I have, no, sorry. This is the quantity. I have 36,000 units of this stock. But what is my average price? My average price is at 2 naira 90 kobo. So when price is now going back up, let me now try and explain another strategy that people use. They call it martingale. But to do that, you will need a lot of money, And I will tell you why how that helps your Fibonacci levels. Like now, if I are taking these 5 entries now, I bought some here, I bought some here, I bought some here, I bought some here, I bought some here. My average price is already around there. Price is almost at my entry. So by the time price just move close, like to 3 naira, I'm already in money. I'm already making money. When price moves above this level, I'm already making money. You get what I'm trying to say? Let's now apply another strategy. You know, there is this saying that if your strategy is to lower risk, at the end of the day, you will lower your reward. When you say, okay, I want to take risk, yes, if you are a risk taker, then your return in the long run will be bigger than someone that wants to reduce risks. Like this strategy now, it has reduced the risks to the minimum. Despite that price fell from as high as 4 naira and 3 naira 90 kobo to this low, you see, I've been able to weather down the volatility in the market. Let's now see if I wanted to apply what's it called, martingale to it. Let's go to the chart, to the Excel. So when in martingale, you don't enter at the same volume, you don't enter at the same price like this. Martingale says that when it's going against you, you buy more. When you do that, price does not need to move up to, if price should move 50% in your favor, you are already in money. If you bought the same volume, if price should move in your favor, you will break even at 50%. That's why 50% retracement works. 50% Fibonacci will work. If you are buying 50, let's say majority of people were using the same volume. So I expect that they will want to start selling at 50%. But let's say now, they now bought more. As price came lower, they bought more. They don't need to price to get to 50%. By the time price is getting to like 38 point something percent, they are already in money. So you will now see that 38.7 at times we now return price because a lot of people have already bought at, there is higher volume at this level, at a lower level. Let's say it went down further and you bought more. Let me now use this 10,000 naira as an example. This 100,000 naira. 100,000 naira, instead of doing 20,000, let's say the first entry, I bought 10,000 naira. At this price, this is the quantity I will buy. The next level I bought, let's say I bought 15,000. The next level I bought 20. The next level I bought 25,000. Let's say this level I bought 30,000. Let me see what is the total volume that I bought equals to. Sorry, I even drag this. Right. Sorry about that. I want to see the total volume. Okay, I think it's also 100,000. You see this 100,000 naira. You see the way I bought them. My average price is still what? This price times volume. Let me see. Sorry. This volume is not this times this. Sorry. This times this. Sorry, I can't really remember this. Let me say equals to this. What's this quantity Okay. I'm using value. Let me use quantity. Let me just use quantity. In this case, this is 25,000 units. 25,000 units. Let me see. Let me even multiply first. This times. Let me see if I will get the same. No. Price. This is my quantity. This is my quantity. Quantity at this price. I can't really get this thing again. Sorry about that. I should have prepared this Excel before now. I was thinking it's something I'll just quickly figure out. But what am I trying to explain? If you know it's 10,000 naira, the quantity I bought. No, let me just a minute, please. Let me create the two so that it won't confuse me. 20,000, 1, 2, 3, 20,000, 20,000, 20. Sorry, 2, 3, 20,000. Okay. In this case, look at it. This price that I bought here was I bought 10,000 naira rather. Yes, 10,000 naira at this price. They gave me this quantity. But in this case, I bought so much. I bought a lot. That will affect my, okay, this is 38. Okay, I think I get what I'm looking for now. The unit I was able to buy here is what? 38,000. But in this case, the unit I was able to buy is 36,000. Okay, I think someone is sending me a chat. Please, how can I get recorded? Okay, I will put it on YouTube. I'll put it on YouTube. I think I've gotten what I was looking for. Don't worry, I'll put it on YouTube. So in this case, let me tell you what I am supposed to. Wow, I didn't even know that we really spent time like this. So equals to, this is what I was supposed to do. I have this quantity at this price, at this price. So what is, this is 100 and, okay. This is the value of the money. Let me see the value of the money here. Control C. It should be more. Okay. Okay, I have more money here. You see what I'm trying to say now? That in this case, see the money that I have. This is the money that I've invested now. At the end of the day, when price came around at 9 naira, at 2 naira, this is what I have. But in this case, look at what I have. I have more money. I hope we are getting it. I hope you are getting it. Let me quickly send you the link to the YouTube channel. I hope you are getting it. I need feedback, or if you want me to still quickly just explain again.
Please re-explain. No, my network keeps running out.
This network is, I can't hear you. The network was breaking.
Please. Yes, please re-explain.
Okay, let me just quickly re-explain. Let me just quickly re-explain. I hope we got it to the level where I was telling you that different entries. Let me go and share this screen again. Let me just quickly share the screen again of this. So you understand the entries that I was even trying to be extreme. I wouldn't have bought around here. I just want to use it as a, this is a resistance now. Price came here. Why will I go and buy resistance? I would rather buy at support. So I wouldn't have taken this. But for the sake of this class, I just say, okay, let's say we even entered and bought here. We bought another one here. We bought another one here. We bought another one. We now bought here. Those are the entries that I have on this Excel sheet now. Let me go back to the Excel sheet.
Okay.
Yes, you understand the entries now. So I'm now saying that
Yes.
there are two strategies now. That, okay, I want to use dollar cost averaging using the same volume. If I had used the same volume, this is what I would have achieved here. This is what I would have achieved. Because I was entering at 20,000, I got this unit. Another 20,000 at this level, I got this unit. At this level, I got this unit. At this level, I got the 50 level, I got this unit. Look at the current price now. The current price currently is at 2 naira 90 kobo. So at this level, look at my investment. My investment was 100,000 naira. At this level, I would have gotten 104,000. That means I'm already in profit.
Okay.
Yes.
Okay.
But in this case, I used a strategy they call martingale. Martingale will not enter at the same volume. As it's coming down, it will enter more. As it's coming down, it will enter more. So that the price doesn't need to get to maybe 50%. Before price gets to 50%, it's already in money. So that was what I applied here. The same 100,000 naira, I split it into 10,000 naira. It came down, I bought 15,000. It came down, I bought 20,000. It came down, I bought 25,000. It came down again, I bought 30,000. Adding everything together is still 100,000. At current price, which is what? It has 2 naira 90 kobo. This is what my money would have been. I've already made 12%. Yes, this is 12%. This is 112,000 naira. So I've already made 12%, even at this level, when price has not gotten to even the entry. Do we understand? In this case, I would have made 4%. Let's now say you now went and enter everything at once. Let's say we enter everything at once. Sorry. Let's say we entered everything at once. Okay, let's say we now enter 100,000 naira here. 100, sorry, 1, 2, 3. This is 100,000. Okay. And I didn't have all this entry. If I had bought 100,000, I would have gotten what? No, this is 10,000. This is 100,000. Yes, I would have gotten 25,000 units at this price. When price comes around here, around the what? 2 naira 90 kobo. My money will be 75,000. You understand what I'm saying? So at this level, I'm still in loss. Still in loss. I'm like 25% still down. And some people have already started cashing out. Those people that are cashing out, they are the ones that will supply it into the market, and they will not allow the price to get back to even the entry. So when the market is reversing, but because the current mood in the market now, as I can see, looking at the all share index, I still expect some further fall. The fundamental traders, the analysts, the professionals, they might have the reason for it. But me, as far as I know, I've been studying chart for many years now. Consistently, I've studied chart for over 7 years. Every day, so I've seen a lot of plans. I've seen a lot of patterns, rather. I've seen a lot of patterns. This pattern that is forming now is a reversal pattern, is an exhaustion. See, momentum is leaving the market and price is already reacting to it. I expect it to come around here, at least to come and find support, maybe on this channel or here. Even if it should spike and it did not have higher high, it takes money. It takes a lot of money to take price higher. For it not to go higher again, it means that there is not much money in the market again. There's a lot of money here. That's why price was able to break here. There was a lot of money here, price broke here. A lot of money here, price broke here. Here, price was not able to break here because the money here was not enough to break it. So it wants to pull back and go to the next support. They call it is a support zone. I've forgotten what we used to call it again. This level now is order blocks, rather. Yeah, I think I get it now. There are order blocks. Orders are sitting here. So I know that there is a strong order block around here supporting price. So let me just quickly check order. You know, this is just RC. Let me just say First Bank. Maybe you will understand what I'm trying to say. FBNH. I just have less than 1 minute. FBNH. Let me see what happened in FBNH. Look at it. Look at what is happening in FBNH. See this support was able to push price higher. Look at where price came and reacted to. And it's now here. The momentum wants to try and go up, but price has failed to have a higher high. If it stays too long at this level, price will come back to this place. It's time. If it stays too long, if in the next 1, 2, 3, let's say 1, 2, 3 weeks maximum, this thing is not able to go higher, price might come to this level again. It's telling you that the money that was here was not much, it was not big enough to cause a higher high. So it failed to have a higher high. This level failed to do its job. Then price will come back and retest it. And mind you, we are in a uptrend. Let me see another stock that I can quickly check.
Stanbic.
All those kind of stuff, me, I don't even look at it. Let me check Stanbic. Okay, see what is happening in Stanbic. Wow, I would have loved to analyze this. I would have loved to analyze this, but price is currently at a support. So if you had wanted to apply the strategy that we were talking about, you just buy some at this level. If price should come, let me quickly draw my Fibonacci. My Fibonacci should be somewhere like this. My Fibonacci should be somewhere like this. See, if price should come to this kind of level, 27, you buy more. If price should come to this, you buy more. You don't need price to get back to this place for you to be in money. By the time price gets around here, you're already in profit. That's just the way it works. I think this is how far we can go today. So, by God's grace, I don't know whether it's next.